What is up everybody, welcome back to another stock market video, and today I'm going to be talking about Palantir stock, ticker symbol PLTR. This is my newest investment, and recently they've just had a 30% dip in their stock price and they've come back up again to the high 20s. So we're going to start off with some charts and have a look at the price action. We're also going to look at the levels that I've been buying in, and we're also going to have a look at this dip where it went all the way down, and what actually stopped it in the mid 20s is because some big funds have been buying in. So we're going to have a look at that and some news clippings, and then I'm also at the end going to be going over what I'm going to be doing in the next couple of months with Palantir stock. And for those that follow me on Instagram, I've been away and haven't been making any videos because I've been building my computer. It's only been the second time that I've built a computer and there's still some software issues. This is what I'm filming on now. So hopefully it makes it through this video, but with that said, let's get on with it. So to start us off, on a Monday, the pre-market price right now is at $28.40, and if we scroll it back to 5 days, or even a month, we can see that on the 9th of February, we had this big dip by over 30%, and then it's climbed back up again by about 15%. Here on my Hatch account, we can see Palantir, and I've got a current value of $6,171 with a return of about 15%, and I've got an average cost of $25, and the current price I've got here when it last closed was $29, and I have over 200 shares, and it makes up 25% of the portfolio. So if we just scroll down, we can see that as it's coming down, I started adding 11 shares, 15 shares at $28, $27, and as it went all the way down around about 25, I then added another 36 more shares. There was actually an issue with the Hatch app, so I had limit buys at about 27.5, 26.5, and 25.5, but it decided just to buy all the shares at $25, which worked out pretty good for me. So that's why it just looks kind of funny with $9 of fees. I actually had these in different amounts, but it decided to buy it at a lower rate. So moving on to TradingView technical charts, we can see the big dip that happened all the way here. That was 30% drop. And in these levels here, that's when I started to buy because that's in my buy range. So if we scroll out, we can see that its all-time high was actually around about $44, $45. So while it was hovering around here, I didn't see it as a buy opportunity until it gets down to the low 30s. So we can see here from the large drops, when it went over $30, it then bounced all the way up for the good news at $45. And then back down again, and I didn't buy any here because it's not at my buying levels, and then eventually when it comes in range of my buying levels, this was a very good time to buy. And that's why it's very important that you should have predetermined set levels, so you understand exactly what you're paying for, what you think the stock is going to be worth, and you don't end up buying at these high levels here where you're paying too much for the stock. And if we just scroll out a bit, we can see that the stock for the last 2 months was actually hovering between the ranges of $25 to $30 until it actually went up quite high in the end of January. So if the stock did continue to come down, we can see that my next support level I had for them was for the mid 22s. So again, I'd be buying around this level. And if it broke the 22s, I then see another support level at $20.50. And this is again where I would buy heavily, but I don't think it's going to go that low. So moving over to the analyst price targets on benzinga.com, we can see that they've only really given it a price of about $20, but we see this one here by Goldman Sachs is upgraded to a buy rating, and they've given that a $34 price target. And this was one of the catalysts for having the price go back up again from those mid-20s. So this article here sums it up why Palantir stock soared today on the 19th of February. And again, this just talks about the Goldman Sachs, this analyst given it a buy rating, and their last buy rating was $13, and they pumped it up to $34. And this was mainly due to their fourth quarter results, which included revenue growth of 47%. To $1.1 billion. So this right here, this growth percentage, is a big catalyst for why Palantir stock is to own. And reading the highlighted management's projections of a greater 30% revenue in fiscal year 2021, as well as long-term goal of $4 billion in revenue by fiscal year 2025. So they expect some big growth out of Palantir in the next couple of years from what the earnings have suggested. Let's now move on to a news clipping of Cathie Wood, who's another fund manager, on her thoughts about Palantir.
Let me ask you about Palantir, which we just found out you've added to. Can you tell our viewers why you added rather significantly to your stake in Palantir?
Yes, they reported yesterday, and the stock was down on the report. It's interesting to listen to the CEO. He was speaking our language. He essentially said to investors, we are playing in a massive space here, and we're going to invest aggressively now in order to capitalize on the exponential changes that are taking place here. So if you are short term in your focus, you probably don't want to spend too much time investing in Palantir. So that's music to our ears because, and we do believe more and more companies are going to start behaving in this way instead of catering to short term time horizons and we would say in some cases, short-sighted shareholders who are much more interested in profits now, dividends now, share repurchases now, than they are in a company investing aggressively for going short-term profitability in order to really to catch some very big waves out there.
So just to stop the recording there, but basically what's happened is that after the earnings has come out, even though they're not actually profitable, they're showing that they're growing quite a lot, they're investing in themselves, and they're thinking long-term ahead. And this is why Cathie Woods has significantly upped her stake in it. She did own Palantir already. She had 2.4 million shares in it, but has then decided to buy even more shares, which we'll go over shortly, because she now believes that they are preparing themselves for the long term, for a bit of short-term pain, which means it's going to be really good for us. We can get in at this low price, and we can hope that we can hold them and buy early, and that over in the next 4 years, we're going to see some significant growth, some significant revenue, which will then push the share price up, especially around the mark when they actually do become profitable. So this article here, Cathie Wood's ARK Invest acquired over 6.8 million shares of Palantir in the last week as a stock dip. So news articles like this are very important to take to account, and also this lets us know from the technical charts that I showed earlier that is a really good time to buy. So reading the highlighted, the shares are worth roughly $172 million as of Thursday's closing price. So she added significantly, well more than double the amount that ARK Invest had in Palantir previously. And this signifies that they are very bullish on this and they have high hopes for the company. Remember, this is a large fund manager. They have a lot of analysts and a lot of people looking at projections of where the price could be, where the technology's at, and how well they're going to compete with other companies. They're just not going to throw down $172 million on hoping that the price is going to go up. They've done all their homework. This is what I'm betting on because I believe in their technology too. So we're just going to go along for the ride. So moving on to this other website called Cathies Ark that I use quite a bit and shown on the channel. The reason why I follow this because I figure out when they actually buy an ad, because usually that is a good time for me to have a look and see if that's a good price for me to add. And usually it is. So we can see here in their ARKW fund that they've been acquiring Palantir over the last couple of months. So it was the stage here that they decided to add in this fund about 1.5 million shares, and so now they have a total of 4.15 million shares at a cost average of around about $22.55. Moving over to the other fund, which is ARKK, is where they've added the rest of the Palantir stock. So let's go down here at 46 Palantir, click on that. On the 18th of February, they added 5.2 million shares at a cost average of $25.08 straight up. And so this is their first buy in this holding, and they decided to do quite a massive buy. So this is actually more than their ARKW fund. So if you're interested in what ARK Invest buy on a daily basis, you can actually get an email notification at the end of the day, and you get this sent out to you. I get it sent out to me, but I find it easier going on to Cathies Ark to actually have a look at the information, as it's displayed there quite easily. But you can get this in email form, and if you have a look here, it's Palantir, and this shows that they bought the 5.2 million shares, and also they added to the ARKK fund, and they have other stocks that they buy as well, so they give you that information on there as well. So just my final thoughts. Everything is looking really good just with the current news, and I currently have over 200 shares now, just after adding those 50 shares on that dip, and I think I got them at a really good price at around about $25. There's not a lot of money left over from buying that dip, and also since having to fork out $3,000 for the computer, so what I'm going to be doing is just watching what the stock does. If it does happen to come back down to the low 25s, I'm really going to be saving up my money to try to buy some more because I think that's a great price. But apart from that, my personal price target for Palantir at the end of the year is $50. So effectively, it's going to be, with my average, going to be doubling my money. But as I say, I'm going to be watching for the revenue and what happens with the company, some good catalysts to actually reach that $50. But however, I am long term on this company by at least 3 years if everything works out well with the management. So just before I go, I just want to talk about the fair value of Palantir, which I think is around about $25 or less. The reason for this is if you have a look at their financials, which I'll go over in the next video that I do, is that their price to sales ratio is very expensive. If you compare that with something like Tesla, they have almost double the price sales ratio. If you don't know what the price ratio is, it's basically the market capitalization is divided by their revenue, and what that means is how much are you paying for the stock right now for how much money they're generating. Now, they did have to do a lot of stock compensation, which has brought the revenue down a bit, but hopefully what we're going to see is that revenue increase, so then it can match the market capitalization of the company. So as obviously, you know, as the price goes up, the market capitalization goes up, and that doesn't really reflect on what the company's doing. But the price ratio is too high. If it's over $30 to $40, and it went as high as $44. So I'm not going to be paying that kind of money for it, for the stock, and you don't really either. So you want to keep in mind that price to sales ratio, because otherwise, if you pay too high for it, basically what you're doing is you're paying for the future gains of the stock price, and you're gonna having to wait a long time before the price is gonna come up to that, and you definitely don't want to be buying it overvalued. You want to buy it at a low price right now so that in a couple of years time it's going to be well over $30-40. Well, that is enough for me today. Thank you for watching. As always, safe investing, and make sure that you do your own due diligence on the stocks that you buy. Just remember, I'm no one's financial advisor, and I'm just winging it just like everyone else, with a little bit of success. May the gains be with you, and I'll see you on the next one. Goodbye.